How do fees work on Forex currency contracts? Forex currency contracts, also known as foreign exchange contracts or FX contracts, are agreements to buy or sell a specific amount of one currency in exchange for another currency at a predetermined price. Fees associated with these contracts can vary depending on several factors, including the type of account, the broker, and the specific terms of the contract. One of the primary fees associated with Forex currency contracts is the spread. The spread is the difference between the bid price, the price at which a broker is willing to buy a currency, and the ask price, the price at which a broker is willing to sell a currency. Brokers typically earn a profit from the spread, which is passed on to the trader. In addition to the spread, some brokers also charge a commission on top of the trade. The commission is a fixed fee per trade or a percentage of the trade value. This fee is charged separately from the spread and can add to the overall cost of a trade. Another factor that can affect the cost of Forex currency contracts is overnight financing fees. If a trader holds a position overnight, they may be charged an overnight financing fee. This fee is based on the interest rate differential between the two currencies involved in the trade. If the interest rate on the currency held in the position is lower than the interest rate on the currency used to purchase the position, the trader will be charged a financing fee. Conversely, if the interest rate on the currency held in the position is higher, the trader will receive a financing credit. The specific fees associated with Forex currency contracts can vary depending on several factors, including the type of account, the broker, and the specific terms of the contract. Some brokers offer spread-only accounts, which have wider spreads but no commission. Other brokers offer commission-based accounts, which have narrower spreads but charge a commission per trade. Hybrid accounts combine elements of both spread-only and commission-based accounts. The fees charged by different brokers can also vary significantly. It's important to compare fees from different brokers to find the most competitive rates. Additionally, the type of account you choose can also affect the fees you pay. For example, corporate accounts may have different fee structures than individual accounts. To minimize the fees associated with Forex currency contracts, traders can take several steps. First, they can shop around and compare fees from different brokers. Second, they can choose an account type that aligns with their trading style and volume. Third, they can minimize overnight holds to avoid financing fees. Fourth, they can consider a commission-based account if they trade frequently. By understanding the fees associated with Forex currency contracts and taking steps to minimize them, traders can improve their profitability and reduce their overall trading costs.